So you did take your rating down this morning. What does that say about your overall reaction? You didn't move it to a sell, so you are still a believer?
Well, I wouldn't say a neutral rating is a believer. We just didn't have enough valuation downside to put a sell rating on it. But I will say that the entire 3G strategy is under question here, and I think it's fair game to ask whether it works or not, to be honest.
Yeah. What is the most concerning aspect of all of this? Is it the earnings miss, the fact that tastes are changing, maybe their products aren't doing what the company expects them to do? Is it the accounting issue? What is most concerning to you this morning?
Least concerning is the accounting issue. Most concerning is that Kraft, like many companies I cover, has, to use a phrase, blown up over the last year. I mean, think of all the companies we cover that have had very surprising disappointments. And I think it's all due to the fact that, or largely due to the fact that consumers aren't eating the same kind of food that they used to eat. That's what really the root of all these problems are.
Yeah. It's interesting in your note, you question the company's overall strategy, almost as though you expect the company to de-lever only to put itself in a position to lever back up and maybe get itself back into some similar problems.
Yeah, I would go farther than that. I wouldn't say it's my expectation. I'd say they explicitly said that yesterday, not the problems part, but the levering up part again. I mean, they said they want to de-lever in order to take advantage of industry consolidation, which is, thinly veiled phrasing for buy something else, which I think is exactly what the street does not want them to do.
And Ken, you spare no words in your report. You say it's fair to ask if there's been any fundamental value created since the merger. Does it remind you of the conversation we had with Peltz and P&G about billion-dollar brands and sort of the lifespan of things in this case like Velveeta and Planters and Maxwell House?
Yeah, I'll pass on the P&G answer if it's okay, because that's under Andrea Teixeira's coverage here. But I will say it is certainly an issue across food and across other industries too, but especially in the space that I cover, where tastes are changing and consumers have so many other options, from organic and natural to eating away from home to private label. It's just a very difficult industry right now in a lot of ways.
So what do you think the answer is? And does it have, is there radical cost-cutting model part of that equation?
Look, I think a lot of these companies are doing the right things, or have done the right things, by trying to rebase, or rather rebase their costs so that they can get to a better margin, but doing it in a balanced way. And I think the CAGNY conference this week in Florida illustrated that. Most of these companies were looking back on some of their cost-saving efforts over the last few years as maybe either overdone or done a little bit ham-handedly. And so you're getting companies focus more on the top line now. I don't think we're ever going to get back to a point where the food space will grow mid-single digits top line again. But if we get to low single digits consistently and a little bit of leverage on the operating line, a little bit of debt paid on every year, I think that's all anyone really wants from my staples companies right now. A consistent bottom line growth story with a dividend. You can get there, yeah.
You think Buffett, who's going to be on air Monday, can shed any light, at least on how he sees this case or the Brazilians in general?
I would hope so. He's obviously, forgotten more about business than I'll ever know. So I'm sure he'll say something extremely intelligent and thoughtful. But I wouldn't want to predict what he'll talk about.
Can you, before we let you go, just give me a little more detail on why investors shouldn't take all of this in total and sell this stock today?
It's a very fair question. I think the answer is that there's still value here, right? You still have some very strong brands when it comes to the Kraft brands, the Heinz brands, you name it. And if you put even a slightly discounted multiple versus the group on a lot of the earnings that we have going forward, there's very limited growth. I think it's trading close to fair value, but I certainly wouldn't be upset if anyone told me they thought it was a sell here. I think there's a reasonable case there.